Well, good afternoon. I want to thank my colleagues, Senator Sherrod Brown and Senator Elizabeth Warren, for joining me today, and also for their leadership on this issue. Both of them played critical roles in different capacities of putting together the Consumer Financial Protection Bureau and giving it the momentum that it has already achieved. And we're here today because President Obama formally resubmitted Richard Cordray's nomination to be chairperson of the CFPB, and we strongly support that nomination. Time and time again, we've seen the far right cry wolf over common sense measures that protect consumers, workers, and middle-class families. 50 years ago, lobbyists warned that passing the Equal Pay Act would be so burdensome that employers, quote, may stop hiring women altogether. It did not. It strengthened our nation, and it made it better and more productive. 20 years ago, when we passed the Family Medical Leave Act, Republicans claimed it would put companies out of business. Instead, it's been proven to be good for families and good for businesses. And today, Republicans are trying to make the case that protecting the American public from predatory lenders and abusive financial products will somehow harm the economy, when the exact opposite is true. A well-regulated marketplace is good for the economy, improving consumer and business confidence, and ensuring fair competition. The CFPB is designed to stop abusive financial practices and keep the rules governing financial service products up to date. Because the products themselves are constantly evolving, they have to be constantly on alert. Every year, hardworking American families lose millions of dollars to deceptive financial practices like hidden fees and predatory lending. We need tough, clear, and fair oversight of the financial services industry, including a strong and independent CFPB that can prevent fraud and abuse. But 43 of my Republican colleagues are preventing the law, the Wall Street Reform and Consumer Protection Act, from effectively being carried out. They think, apparently without considering the irony of some of the previous statements I've made, that the CFPB is too independent from Congress. It certainly is the prerogative of my colleagues to work on improving any piece of legislation. But to effectively say we will not pass bipartisan legislation, will not let that bipartisan legislation that has passed by 60 votes, and that's the Dodd-Frank Act, and has ample precedent to take effect because we don't like the person they're putting in charge, or we're going to use his nomination or her nomination to object to the legislation. And let's look at some of the ways that they want to weaken the Bureau. The fact is, unlike any other financial services regulator, the CFPB's rulemakings are subject to review and can be vetoed by a council of regulators known as the Financial Stability Oversight Council, FSOC. And this is an extremely powerful check. No other financial regulator has such a check. Republicans would also like to change the way the CFPB is funded. Instead of allowing the CFPB to fund itself out of the operations of the Federal Reserve and fees collected by the Federal Reserve from the financial services sector, they want politicians to control its budget and taxpayers to foot the entire bill, not the banks. That doesn't make sense in terms of taxpayers, and really it opens the invitation to some of my colleagues to begin to slowly squeeze out the resources CFPB needs to get the job done for consumers. Last year, the CFPB's budget was a little over $400 million, and they successfully recouped $425 million in refunds for consumers who had been misled into signing up for services they didn't want, need, or didn't understand. All that complex fine print that most folks don't have the time to read, and many lawyers, I'm one, barely understand, the CFPB tries to intercede on behalf of consumers and hold the violators accountable. The CFPB is there to help students and families trying to pay for college, to protect our veterans and military families from getting scammed. They are shining a bright light on statutory predatory loan practices, bringing them into the light where they can be seen and stopped. Transparency, information is what makes an economy work effectively for everyone. The American people need a strong, independent CFPB. And so do the banks, from Main Street to Wall Street, which is why industry leaders have spoken in support of what the CFPB is doing. When asked to comment on the CFPB's qualified mortgage rule, Richard K. Davis, the head of U.S. Bancorp, said, quote, My impression actually is very positive. I thought they did a nice job of what I call soft landing. Similarly, Jamie Dimon of J.P. Morgan complimented the work of the CFPB, saying they've done a great job. They've started from ground zero, and they are making great progress. We want to protect and promote good banking and services practices, and the CFPB will ensure that banks that play fair can excel on the merits of their products, not on being able to mislead consumers. Consumer Reports noted that in its first year, in their words, the CFPB has created a welcome basket of new resources for borrowers and given notice to credit card insurers, mortgage lenders, and other enterprises that the days of dissing the consumer are gone. Those days should be gone. We should allow the CFPB to do its job. Assessments from the gentleman and from Consumer Reports that I mentioned are indications they are doing the job. We have to move forward, confirm Mr. Cordray, and let the CFPB do the job it was designed to do. And let me stop now and turn it over to Senator Brown.
Thank you, Senator Reid, for your leadership, and Senator Warren for your outstanding service already in the Senate and your understanding of this issue and its importance to consumers everywhere. No one in the country, no one in the Senate that I've heard of has said that Rich Cordray is not qualified for this job. He was a state legislator. He was county treasurer in Franklin County, Ohio's second largest county. He was state treasurer and did very good work in that position. And he was Attorney General of Ohio, and his work in the consumer in this Consumer Bureau, as Jack Reed said, has been complimented. He's been complimented by all kinds of people for the work that he's done, even people that he regulates, and certainly people that have benefited from his work in the Consumer Bureau. This is only the second time I've checked with a Senate historian. This is only the second time in Senate history that anyone can find where someone who is considered qualified where one political party has kept someone out of office, refused to confirm them for a position who they acknowledge is qualified because they don't like the agency which he would lead. The first time that happened was the same agency and the same appointee in 2011. Imagine the precedent this sets in the United States Senate if they again block an appointment of Richard Cordray to be head of the CFPB. Imagine the precedent that sets for the Senate. If you don't like an agency, if you don't like the laws that created an agency, or you don't like the way this agency has carried out its mission, you're going to refuse to confirm someone in the future just because you voted against the law when it was created. As Senator Reid pointed out, 60 senators, overwhelming majority, voted for this, voted for Dodd-Frank, voted for the CFPB as part of Dodd-Frank. 60 went through the regular process, regular order in the House and in the Senate, in committees and conference committee, and it was signed into law by the President of the United States, yet at least 43, 44, 45 of our Republican colleagues have said that they don't like the agency, so they're not going to confirm them, and they don't care about the dysfunction that will cause in this agency and the dysfunction this causes in our government. Now, they will tell you that the Bureau is not accountable. That's the term that they use frequently. Understand this, though: the governance structure is similar to that of the OCC and the FHFA. Their rulemaking and enforcement powers are similar to those of the OCC, the FHFA, FDIC, and the Federal Reserve. And all of those other agencies have similar funding mechanisms. However, this one is the Consumer Bureau is even more accountable because none of them has a cap. They have a cap on their budget. For all of those reasons, their argument doesn't hold water. It's clear why they are blocking why they are blocking Rich Cordray as the leader of this agency. They simply don't want that kind of Wall Street oversight. Senator Warren?
Thank you. Thank you. It's good to be here. I want to start by thanking Senator Reid and thanking Senator Brown for their leadership. You're why we have a Consumer Financial Protection Bureau. And I just want to thank you for all you've done. It's a great agency, and it's off to a great start. You know, I first worked on the idea for the Consumer Financial Protection Bureau for some pretty straightforward reasons. The laws were a mess. Millions of people got cheated. Some big financial institutions had built their profit models around tricking and trapping their customers. And we had a runaway mortgage industry that nearly broke our economy. In 2010, under the leadership of these men and others, Congress created the Consumer Financial Protection Bureau, and its goals were very straightforward. It was to be a watchdog on behalf of consumers and to fix the structural problems that nearly led to the collapse of this economy. Now, I remember what that was like. There were many discussions, hearings, conferences, votes, floor votes, committee markups, a very active process in negotiating all the parts of Dodd-Frank, but particularly the part over the Consumer Financial Protection Bureau. Congress was very active. And in building and ultimately striking a deal, that Congress developed a consumer bureau that was full of safeguards, had adequate safeguards and meaningful oversight. The first one, it's been mentioned by both senators, is that this is the only agency anywhere in government that its rules can be overruled by a group of other agencies. This is the agency that has a statutory cap on its funding, unlike the other banking regulators. This agency makes regular reports to Congress, testifies, is subject to audits. It has all the normal constraints of an agency, the Administrative Procedure Act, judicial review, and so on. And always remember, if Congress doesn't like something that the consumer agency does, Congress can always overrule it itself. Now, since Dodd-Frank passed and the consumer agency was turned into law when the president signed the bill in the summer of 2010, there have been two major developments. The first one is the consumer agency and Richard Cordray have done a great job. You know, just in that short time period that the agency has been up and running, credit card companies have been forced to disgorge nearly $500 million that they cheated consumers out of. New mortgage rules have been issued, mortgage rules that will protect consumers and help prevent a bubble, the kind that nearly collapsed this economy. They got a hotline that's up and working, and I got to tell you, check out that hotline. I met people when I was out walking across Massachusetts who talked about having used the hotline. Not all the pieces are operational yet, but it's up and going. People who used that hotline and found it very effective. Someone on the consumer side to try to help level the playing field. Consumer groups have praised the agency and have praised Rich, and the industry has praised the agency and has praised Rich. So that's the first thing. We've had it up, we've seen it in operation, and it works. The second is our marketplace needs certainty. You all may remember having seen the D.C. Circuit Court of Appeals opinion that came down a couple of weeks ago. It's created some uncertainty about its implications for the consumer agency, but I want to make a clear point here. The banks need to know what rules to follow. Whatever your view is on the D.C. Circuit opinion, and we can talk more about that if anybody wants to, here's the part that is clear. The Dodd-Frank bill was built with a fallback position in it, so that if the consumer agency was not able to come up with mortgage rules by a date certain, then rules that were enumerated in the statute would just automatically go into effect. Remember, in 2010, this was a Congress that was very concerned about the mortgage crisis that we were in the middle of. So there's a set of default rules. Now, the consumer agency has come up with a set of rules, and they're good rules. They're rules that work for consumers. They're rules that work for the big financial institutions. They're rules that work for the community banks and the credit unions. If there is a doubt about whether or not the consumer agency can issue those rules, the banks are in a position of great uncertainty. And let's just keep in mind, they needed to have complied with the fallback rules as of January 21st, 2013. So the way I see this is that, look, I'm new to the Senate and I confess I don't get this. We shouldn't have a system where more political stalemates just create more bad government. You know, this isn't about more government or less government. This is about bad government. Because what we have here is uncertainty, a lack of clarity about what the banks should do, and whether or not consumers can rely on this agency to be able to get the rules out that it needs to get out to keep this market working. So I think it's time for the United States Senate to give Rich Cordray an up or a down vote. If there are senators who want to vote no, then let them vote no and explain that to the American people. But he deserves a vote. The American people deserve a vote. Thank you.
Thank you. Sherrod. Elizabeth, question, please. Yes, sir.
Yeah, my name is Carter Doherty with Bloomberg News. Many of the facts that you state here, I think, are fairly undisputed, as you point out, the industry's in support. Which leaves us with the political question of how to break this deadlock. I mean, what's the solution here, on your part and on the part of the White House? I mean, there have been moments in time, especially in the course of Dodd-Frank, where the heat was turned up considerably, and we found out exactly who would melt. I mean, isn't that?
Well, I think this is a question of making sure that the American public is aware of what is at stake, and both Elizabeth and Sherrod have made excellent points. First, the industry needs certainty. And they also need, I think, a comprehensive approach. For the first time, Dodd-Frank actually sort of started regulating the shadow banking industry that was leading the whole industry in a downward spiral. Lower and lower standards in terms of mortgages, lower and lower standards in terms of underwriting. We have to stop that, and this agency is going to be very effective in doing that. Well, that's from the perspective of the financial industry. From the other perspective of consumers, which is every American, they've got to know that they have an agency that's out to protect them, and it's being undermined, throttled, cut back. And if we can get that word out, then the pressure will build. And ultimately, one of the virtues of this country is that we do respond to the public. That's what ultimately caused Dodd-Frank to pass, because people said, you've got to fix this problem. We cannot endure another one of these episodes. You can't have the worst financial meltdown since the Great Depression and sort of do nothing. But it took a long time, and it took getting the public focused, and that's one of the reasons we're here today. Elizabeth?
No, I think you've said it.
Jack Torrey, Columbus Dispatch. Senator Warren, if you accepted the Republican changes that they're proposing, what would that do to the agency? How much damage, in your judgment, would that do to the agency?
There's a reason that there is no banking regulator that goes through the political appropriations process. And that's been true, not just in the last few years, it's been true since the 1860s, when we first developed the Office of the Comptroller of the Currency, our principal bank regulator. They've been insulated from the political process, both to assure that they are independent and that each judgment they make is independent of any part of the political process, and to give the American people some confidence that they are independent. I think both of those are important, the actual independence and the appearance of independence. If we lose that for the consumer agency, that's a powerful blow. This is an agency that's there to be a watchdog on behalf of the American people, and that's what it needs to be. Senator?
I just want to add, this is not technical smart corrections based upon reports from the field that things aren't going well. The reports from the field are from industry and from consumers. This agency is working well. This is designed, taking away its independent status, taking away other aspects of the agency to basically eviscerate it so it won't operate. There might be people sitting at desks, but they're not helping consumers. The whole point is to help consumers. And the other point, and I think we have to go back to constantly, is a successful competitive market requires that consumers know what they're buying. Otherwise, we'll find ourselves right back where we were in 06 and 07, where people were signing up for mortgages they couldn't afford, being told, don't worry about that, you can refinance in 2 weeks. We don't want to go back there. We had a painful, expensive lesson in the lack of consumer protections. And unfortunately, I think some of my colleagues have already forgotten that lesson. Yes.
Donna Borak with American Banker. Putting aside the appropriations question, I mean, one of the concessions that's been proposed is the fact of going from a directorship to a commission. Is that something that you'd be willing to compromise on in order to have Richard Cordray get confirmed?
I think, again, you've got a record already where this agency has been very effective as it's been designed. And as Elizabeth and Sherrod pointed out, this was a process of collaboration and discussion and debate between Republicans and Democrats, leading to a bipartisan vote on a director for the commission rather than a committee. And again, I think this is another thing. If we get so many people where you can deadlock in the committee rather than having clear leadership. I mean, again, I will defer to someone who has much more experience than me that, we don't have a committee running the national banks. We have the comptroller of the currency. And I don't think anybody in the banking committee would like to see a committee running the national banks, because they say, well, we don't have clarity, we don't have a point of contact, we don't have a clear person in charge. And I think that same principle should apply to the other side of the equation, to consumers.
Please, no, I think you're right.
Senator, to follow up on that point, though, I mean, the OCC the last few years was, left over from the Bush administration, and FHFA was the same thing, and those regulators, political appointees, stood in the way of stuff the administration wanted to do, and so the argument for a commission would be that you wouldn't necessarily have someone left over like that. I mean, Democrats won't always be appointing the head of the CFPB.
I think the criticism, and I want Elizabeth to comment on this, the criticism of those organizations is that, in fact, they were captured in many respects by their clients. Well, we now have a counterweight. We have an organization that has statutory authority that's going to be on the other side of the transaction for consumers. And I think that give and take is going to add to a much better, fairer, transparent marketplace. So, again, I don't, the fact that there's directors that are, that are very sensitive to the bank's concern, that's one of the natures of the banking regulators that have probably been since 1860. That's one of the reasons why we wanted to have a conscious, balanced counterweight, thoughtful, and instructed in this way. And I think that's what we have. But Elizabeth, you should comment.
No, the only thing I will add is trying to get 5 appointments through is not somehow easier than trying to get 1 through.
That's right.
I did that math.
Senator Warren, earlier this year you were a supporter of the effort to reform the filibuster. If Director Cordray can't be confirmed by the time his recess appointment lapses, would you and other Democrats attempt to rekindle that effort?
I can't speak for anyone else, but I think it is fundamentally wrong to hold up a vote on Rich Cordray. The president has nominated him. He appointed him during a recess. He has now renominated him. Rich has proven what he can do. This agency has proven what it can do. The agency has been signed into law. We've got every piece we need. And the notion that a minority can hold up the laws of the United States by using the filibuster on an appointment is fundamentally wrong.
Thank you all very much. Thank you. Thank you, Elizabeth.
Thank you.
Hold on.
Thank you, dear.